Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar finally cleared that level of 75.2535 upon the announcement that the RBA, as widely expected, kept their interest rates on hold at 0.1%. However, the market is still somewhat scrutinising the report, as there is some potential that we could eventually see a turn in the RBA. But from the break, the market has rallied on and now claiming the 76 region. Although I am neutral now because we've broken through 75.60, is that when we look at the weeklies, there is further upside expectations due to the current strength that we're seeing here. As I mentioned, I am neutral short term, but for those who want to trade in a volatile sentiment, as the whipsaw price may actually continue, could see a squeeze anywhere up to 76.5 to 77 cents, where I've outlined. From a weekly point, it's gaining further momentum, but the dailies are getting a little bit overbought. Nevertheless, this is quite a strong candle that's broken out of this range. But as I mentioned, I don't have a strong view here, but for those are looking to trade the Australian dollar, there is scope for at least up to 76.5 to 77 cents and then reassess from there. The euro at the moment is still maintaining its bearish course, and that is towards 109.30. If we do see a break, could see further scope towards the downside and bring in the target that was recently viewed around 107.50.80, and in light of the pattern could actually eventually get there. But before that call, of course, there will be profit taking, no doubt, from around 109.30 like we've previously seen when the market did jump. So let's see how we are viewing towards this bottom side. The outside range day was confirmed as well, and therefore looks for the bearish case to continue. The dollar yen is squeezing higher, but I feel with the heavy technicals that the market should eventually reverse anywhere above 123. If so, then could see a pullback to that 121.5 and reassess from there. Sterling, I believe, is still holding a bullish case as the RSI is marrying up to the MACD, and it still maintains a bullish case, and therefore I look towards 133 as a potential target and reassess from there. Any weakness, I still view around that 130 to 130, 50, 60 area as a potential base. In light of the New Zealand dollar, as the market for the sterling Kiwi has actually plummeted through the support level 188.5 and given room there down towards 186.5 as a potential target. And even though that is actually seen, this is what surprises, is the fact is as this line can be drawn to the downside, then this indicator is still holding divergence. I got a feeling that this market is going to eventually really come in with a very bullish candle and eventually take probably a rebound from 186.5 back up towards 190 to 192. Wrapping up with gold and oil, I still hold a bear case, and that is towards the 1,900 mark. The technicals from the RSI can't break through this midway point and therefore should see another down test and therefore look towards that base. A break beneath there would give further scope towards 1,869 to 72. Now the oil jumped 3% and actually rebounded from this sort of 97.70 level. I feel the market may actually take one more step to the upside, but it will probably be fouled towards 106 and therefore see another down test. Overall, though, I'm not getting bullish at this part of the range, and I'd rather wait for opportunity either to sell the rally into 106 or maybe even see the market turn around and maybe even dump back towards 192 as a risk to, or not 193. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.